We are so blessed in North Carolina to have 4 seasons of the year, even though sometimes the seasons don't last long. But welcome to fall in North Carolina. Leaves are changing in the mountains, and we're getting cooler nights over here in the east side, and it's just a good place to be. And so thankful for the change and opportunity to change our styles of our clothing and such as that. This is my first sweatshirt night, and it feels pretty good, actually. So welcome, everyone. Whatever business you're in, you may be really good at what you're doing. If you're a cabinet maker, you may be a wonderful craftsman. If you're a writer, maybe you've got a good skills with your words and penmanship. Selling insurance or tax services, you may be a great salesman and know your craft. But when you own your own business and you're running it, we have to bring in some more skills that maybe we haven't used before. And in my 60-some years of doing small business, it seems like to me that the 3 most ignored skills with startup business folks are bookkeeping, forecasting, and negotiating. And therefore, I include these 3 topics in all of my core topic seminars. So welcome. Let's put on our happy face and move on. My name is Steve Carver. I invite you to send me emails with any questions or any suggestions on how I might be able to help you. Nothing I do is there's a charge for it. It's all free, and I'm glad to help all I can. So send me emails with your requests or homework that you're sending in, and I'll certainly try to respond to you as soon as possible. Here are my email addresses, the main one being stvcarv@aol.com. And if you all will sign in over on the chat board, I'd appreciate that, because that's where I can double check and verify email addresses to get back to you and send you information. My name is Steve Carver. I'm in Dunn, North Carolina. My presentation number 1210, and as for the last 2 or 3 weeks, I'm coming to you with a sinus infection and a weak voice, so I hope you can understand me okay. We will do a video recording of this session, and I'll send that to you tomorrow by email. I'm not a lawyer or an accountant, just a fellow that's been in business for 66 years and counting. I did write much business today nationwide with implement sales and part sales through our website, carverequipment.com. And it's good to do business. I love doing business and hope to do it a long time. Main thing I do is offer free advice, and the first piece of advice is always to get a second opinion and talk with someone. Find someone you can trust and share with that confidentially, that you can enjoy sharing your ideas with, maybe getting some feedback. And the small business centers throughout North Carolina have directors and staff there that are professional advice givers, counseling, and they open doors to resources that maybe you didn't know that were available. We're sponsored tonight by the Small Business Center at James Front Community College, and Joey Wind is our director, and she is a wonderful director. Looking forward to serving you any way that she possibly can, as is her assistant, Lynn Murphy, who is a professional commercial kitchens person, plus lots of other skills. So between the 2 of them, you can get lots of information from them. If you're in a position with your telephone to take a picture of this QR code, let me ask you to consider doing that. Just snap it right now with your phone. And that is a real easy way to get the information in your phone so you can sign up for these seminars very easily. And it really helps them when you do sign up at the Small Business Center for these webinars. Hopefully you're in the system and you've already received the 10 study guides for tonight's lesson. Mainly the book number 1210 is the study guide for this presentation with the talking points. But a lot of these other study guides are very important. I suggest you save them in your files. Someday they'll come in handy for you, save you some money and some stress probably. Your homework challenges are here for those that are working towards getting more certificates. there's a new one, actually two new ones in the Knights package compared to the last few weeks. The first one is one that I'd love for you to read carefully and then read again. It's about creating impressions, which we'll talk about a little bit later. And then you've got a quiz that summarizes our whole course of study for the last few weeks. And those answers are very important. And I ask you to, if you would, take that quiz. It's a Word file, so you can work with it right with your computer and save it and send it back to me after you answer the questions. All the answers are going to be right, of course, because last week I sent you the quiz with the answers. But please fill that out and email it back to me. It will be one of the qualifiers for the Academy membership. If you've done the quiz before, this is the same quiz I've used all year long. So if you've done the quiz before and you got a copy of it, just send me your old copy and that'll be just fine. Next week, we're going to be talking about taxes that affects new small businesses, record keeping, depreciation, deductions, things like that, and some secrets about how to help you sell and close deals. I'll be glad to share those with you. That'll be next week. And then the following week on Thursday, we'll have a live in-person gathering. You all are invited to come to Clinton, North Carolina, if you'd like to, just to meet and greet, share some discussions, have a roundtable discussion so we can all hear from each other. I'll be furnishing some pickup of snacks, pizza and sub sandwiches and some drinks. So we'll have something to nibble on, and just look forward. There's any way you can and would like to come, would like for you to do it. Our sponsor over in Clinton, Rice will be getting us set up at the Sampson Partners building. It's a real nice facility where we've held seminars before right downtown, and I'll get you directions to it if you'd like. So we're looking forward to a good night. It'll start at 6 p.m. October 23rd. Meet, greet, network, and discuss challenges we all face. For this class and for our Thursday night classes, I'll have certificates ready for the graduates and the completions. So if you show up and you qualify for a certificate, I'll make that presentation there. And then afterwards, anyone that couldn't come, we'll mail them directly to you. So we look forward to that. Basically, the program we'll set up there, we'll move in about 4 o'clock in the afternoon. They'll open the doors at 5, invite people to start coming in at 5:30. Just a very social crowd. The dress would be social business. And glad to have you come in. We'll have refreshments available to start snacking. Hey, Marquetta. All right. And we'll have the roundtable discussion start at 6:30. Present certificates at 7:15 and probably adjourn by 7:30. So if you can come over and enjoy the time and fellowship and discussions, we'd love to have you come. I'll send you an email and ask for an RSVP if you are planning to come so we can get your name in the pot. Everyone's looking forward to receiving certificates of completion. Many of you have already done that, and those that are doing homework assignments and taking the next step forward, we'll look forward to that. I do keep up with attendance, and several of you have already qualified for your certificates, so I've asked Sarita to start, go ahead and start printing those so we'll be ready for you. Many of you, after attendance tonight, will qualify. So we, and I see that a bunch of you are here, so we got a bunch more certificates to print for you guys. Thank you so much. So those of you who are staying in touch, we have a lot of people that are staying in touch with me and sending in information about what they're doing. Sherry, good to have you on board, and I'm so happy to get your email this morning where you completed another chapter in your book. We all are looking forward to the great introduction and letting us all know about its title and when it's going to be available and where we can buy one at. So congratulations and keep up the good work. Sam, good to have you on board tonight. I sent you an email late this afternoon. Sam's over in Hillsborough, been very active in his business and considering some new aspects of the business. He's a professional, technical and security systems professional, amongst other things, working on his menu of services and mission statement, and one of the best frequently asked questions list I've ever seen. So thank you for sharing that with us, Sam. And when you're ready to announce what all you're doing, just let us know and we'll help you promote it and help you make some money with it. So good to have you with us tonight. Let's everybody give Sam a hand. He's working hard on getting his new business started. So thank you so much. Sam, would you like to make any comment? I see you're with us.
Not necessarily. I appreciate the plug and everything you're doing. So I'm taking copious notes.
All right. Thank you, Sam. I appreciate you being with us. Mikhail over in Clinton, working hard on getting her operation up and running. She's got a lot going on in a lot of different areas, and we're looking forward to some announcements from her. Tisha in Magnolia has been a long-term member of the Academy and attends on a regular basis, so good to have you on board with your alterations business. Robbie James, again, we're congratulating him. He's in Roseboro, Clinton area, and being chosen for the Goldman Sachs training course. And Tracy's a fantastic opportunity to get her business up and running. We're looking more about hearing from her. She's operating her business as the Love by Tracy McLeod, where she's helping people with self-worth, building confidence, and finding purpose through writing. Has a lot going on with a great website, so we're looking forward to hearing lots more information about Tracy. She does coaching, a 90-day lifestyle coaching program. She helps people that are writing with their books and has good information and confidence building for her, and she also does motivational speaking. She's already written a lot of books and has them available online for sale. That she's been a professional book writer for organizations for a long time. I'll mention that we might want to get Sherry talking with Tracy a little bit. Might have some ideas and things to share about that. Tracy's has a great menu of books that you can buy online at her website and got them well done. Kevin's been with us very religiously, doing a great job getting his business up and running. I'm glad for your note, Kevin, as you're planning on being with us in Clinton. I'm looking forward to shaking your hand, giving you a hug. Same for Lynette. She's planning on coming. Maybe we can get her to sing a song for us while she's there. Appreciate some of her entertainment. And if you have an interest in hiring, booking, religious, jazz, musical entertainment, Lynette may be the person you may want to talk to for your special event. Find me on Facebook, if you will, and Anthony Stephen Carver. Let's connect and help each other grow our businesses. We've also got a Academy page at Facebook, and then after our certificates are completed, I'll do a highlight on each person that is qualified for a certificate on our Facebook page, and it'll remain there for the future so that other people can see what you're doing and connect with you and help promote your business. My job is to be assertive and to motivate. I certainly try to do that. Tonight's presentation is not about going out in the world and advertising and making sales, but it's all about let's motivating ourselves to increase our skills to the point that we can be more effective and be better managers and owners of our businesses. I like to take advice from people that have done well and have good sayings, as we do each week. We're wrapping up tonight, though. We're talking about little things to help us remember. And Walt Disney says to us, let's quit talking and start doing. Michael says there's not a finish line here. We just need to keep working and take it 1 mile marker at a time. What does that mean to us? That means set your priorities each day, and each day go to another mile marker, and we'll be making progress when you're doing that. Bill Gates said we really need to pay attention to our unhappy customers, because by talking with them and learning what their problems are with us, we can begin to improve what we're offering to our customers, and therefore be more effective in our selling and campaigns. Nelson Boswell said, remember to give your customers a little bit more than what they expected. Always go that little bit of extra mile, just like we talked about earlier. The extra mile puts a good taste in your customer's mouth, and they'll want to come back and do business with you. But you have to think about it. It's got to be one of your priorities as you're talking with a customer. What can I do or offer or say that will give them that extra good feeling about doing business with us? Try to hang on this just for me. If there's one little skill set that you can put in your tool belt, this is one of the ones that you'll want to remember, because it will bring back good dividends for you on a regular basis. Mark Zuckerberg said, the biggest risk we'll take is not being willing to take any risk. And he's absolutely right. If we want to move our business forward, there's going to be some risk involved, and we just have to learn to take them. What we've learned in our course working together here is it's okay to take risks. However, you need to have risk management tools in place to make sure these risks don't sink our boat. So just keep that in mind. For every risk, there's a risk management tool you can put in place. Jenny Rometty said, it's not what you know that really counts. It's what you share, what you're willing to share. And as I said, it's trying to give customers a little bit more. These are linked right together, and sharing, listening, caring, and making sure your customer knows that you are willing to share. And indeed, you'll start a better relationships every time you do that. Sam, I mentioned to you, Sam, I was looking at y'all's corporate website this afternoon, and it's a great website, and it's kind of unique in that it's all business, but also there's a lot of heart and soul in the way y'all presented your website. And that means a lot. There's a warmth to it where people feel like, hey, I kind of like what I'm seeing and hearing here. I would like to see some videos at your website. I think it would help you out a lot. But what you're willing to share and help people with go a long, long way. And Wayne Uzina always said that some people have got lots of dreams, and we all have lots of dreams every night, right? But the key difference in what you will do is after we have that dream, are we going to wake up in the morning and go out and make it happen? That gets back to what I keep saying about setting those priorities. How do you go out and make it happen? And the way you do that is you set those priorities every morning and go out and make things happen. So thank you, Wayne, for the good advice. I agree with you. We talked about our 40 drill skills. We've done 25 so far. This week we'll do 25 through 32, and then next week we'll wrap them up. So pay attention here, if you will. You've got a handout in your study guides on the drill skills, and I suggest to you that you take each one of those skills, and they're in a Word file, so you can type it right out under it. And on each one of them, go under that skill and type in there how you will use this skill in your business, what you will plan to do with this knowledge. And by doing that, you'll become more and more adept to putting these drill skills to work for you, and they'll start paying real dividends for you. So I've been doing this for a lot of years. These drill skills are important, and they're worth listening to. So number 25, and would dive deep into this tonight. Nonverbal communications are really important. You have to be aware of it. It has to be part of your psychic and your way of thinking, your mindset. So whenever you're closing a deal or negotiating, be aware of nonverbal communications, because sometimes the customer will really tell you more about what they don't say than what they do. One of your handouts tonight, one of your study guides, or two of them actually, go into nonverbal communications and body language. Please take a look at those, and they'll really help you. But we'll talk about this a little later tonight. I've mentioned that I am an assertive person because we have to motivate others. My job here is to help motivate you guys if you want to be motivated. Now, I want to tell you it's your job to be an assertive person as well. Not to the point that you turn people off, hopefully, not to the point that you're pushy or bossy, but knowing that it's your responsibility to your business and to yourself to be willing to encourage people to let's move, let's motivate, let's buy this thing, let's do this task, let's make this service work. So it needs to be a part of what we're doing every single day. Every night when I give this little speech, this class, I'm reminded to myself that I need to continue to be assertive in certain ways and to help people motivate themselves and other people. Next week, we're going to talk about taxes, but I wanted to say tonight, the two words that are often mixed up here, and almost no instructors would ever say what I'm getting ready to say is, I want you to know and appreciate tax avoidance. Every accountant, every bookkeeper, that's what they're there for, is to help you to avoid paying more taxes than you have to, and also to pay the ones you're supposed to. But tax avoidance is a good thing. It's a real good thing. It'll help you save money and end up with more profits. Tax evasion, on the other hand, is a bad thing. That's when you're breaking the law and you're breaking the rules, and it will eventually, at some day, come back to haunt you. So remember, as we're talking next week, that you do want to understand all your tax avoidance opportunities with deductions and depreciation and other things, but you also want to understand where that line is that you cannot cross that moves you into tax evasion. Encouragement here. It's not how many times we get knocked down that really counts, but as an entrepreneur, especially a new business entrepreneur, it's how many times we get back up and stay in the race, stay in the game that makes the difference. I'm going to tell you right now, I appreciate the fact that you will get up after getting knocked down 9 times, and that you will keep working at it, and you'll just take it with a stride and know that this is what we have to do. You know it now because I'm telling you, and I'm giving you forewarning, that people are going to tell you no, 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 no 9 times before they're going to give you any of their real big money. So, and you've got to earn your place in society and in the neighborhood and in the eyes of your potential customers. That's why we have to keep those constant promotions going out, because every time they get a new email from you, see one of your ads, go to one of your web pages, that's kicking down that number of times they're going to say no and increasing the number of times they say yes. When I first started on it with internet sales some 35 or 40 years ago, I bet we would quote, if we quoted 100 times, we would get 1 order out of it or 1 response sometimes. Now, after all these years and creating a customer base with a lot of trust and a good database of repeat customers, we're probably getting a response of 3, maybe 4 out of 10, 40% creating sales and quotations out of each person we send out of each 100 that we send promotions to. And we send out a lot of promotions, therefore we get a lot of opportunities to make sales. But we got, to begin with, we got knocked down a lot. And the same thing will happen to you, but you keep the faith and keep at it, and things will get better as you get better. We talked a lot during our last many weeks together as a class, and I want to bring it home now, start bringing it home, things that y'all really hang on to. The little things that will make up the biggest differences in your opportunity to stay in business for the long haul, and that is, do what you do to create a legacy of being a giver and not a taker. Be that person that is willing to help other people, admit when you're wrong, extend a helping hand, light your candle to lighten their way, and give warmth. Instead of being the type of business person that's all about the almighty dollar and nothing else. That basically at some point in time will cause your relationships to go stale, and your reputation out in the real world will not be one as a giver, but one as somebody that, well, maybe I don't really want to do business with them. It's all about your mindset and your mental attitude. when you're being the best person you can be, you're being the best business person you can be. So remember now, the nights, days are getting shorter. We don't see a lot more darkness. Let your light, your candle shine. Be willing to be proud of what you're doing. It's up to you to light your candle and let it shine, no one else. So we have to brag on ourselves from time to time. We have to do our own advertising and marketing. And one of the best ways to do it is light that candle and be proud of who you are and what you stand for, and have a moral compass and let people know that you do. Number 31, we talked about in week 4, the Golden Goose marketing campaign. You remember that? And the whole key, the whole objective in that Golden Goose marketing campaign was to work our way all the way around, feeling the success, but to get to the magic marketing moment. If you remember this course, I want you to remember magic marketing moment, because that's the time when you're able to get information from your customer about what's next. What are they planning on buying next? When do they plan to buy it? Do they know someone else that's in the market? What products or services might you need to add to improve? And you're writing this down and you're including it into your marketing campaign you're planning for the next season. This is the difference in just floating down the river, taking whatever comes at you, be it flood or drought or rapids, versus having a charted course, a safe path. The magic marketing moment and your marketing campaign give you that stability to let you know what's next and assure you that in good times and bad, you're probably going to make it because you've got that good plan. I mention oftentimes, so I need to keep doing it. If you don't have videos of yourself about your products and your services on the internet, if you don't have YouTube videos about yourself and your products and your services on the internet, then you're missing the greatest opportunity of free advancement that you can do. YouTube videos mean profit for you. They're easy to do. You can take the same platform that we're working on tonight. You can join that at no charge. Make your own videos there, just like I make a video every time we do a class here. Get into it and put money into your pocket. Add videos. So, football season, and I'm loving football season, baseball season as well. But in the football games, you're either up in the stands cheering for the people that are in the game. And if that's where you are, let me encourage you to be willing to get down on the field and get in the game, keep pushing, taking it to the next step. There's no money to be made up in the stands. That's spectator sports. And if you are spectating now about becoming your own business person, let me encourage you to get into the game. So it's time to start your marketing. The holiday season is here. The marketing season is here for the Thanksgiving, Halloween, Christmas, and New Year's, the main buying seasons of the year. And if you're not out there marketing your business, then you're making a mistake. Get on Facebook, do your YouTube videos, create testimonials, do your mission, vision, and promise statements. Give me some product videos, product photos of your vehicles and your signage and yourself. How about some business card copies? Do these things and get your business started. That's the way you get it, doing it. So moving into the serious conversation tonight. Bookkeeping, forecasting, negotiating, and in your study guides are lengthy studies about negotiating, body language, and nonverbal communications. These are textbook important. These are the same things that are taught all over the world in college business courses. Tonight's presentation will be very much abbreviated because there are time limitations, but these study guides are important. So let's see what we got to do. Bookkeeping number 1. I'm not here to tell you how to be a bookkeeper. I'm not here to pretend that I know all about bookkeeping software and what's good and what's bad and such as that. But I am here to tell you that after 66 years in business, that being able to glean out of the bookkeeping information as a business owner or sales manager will give you vital and critical information to help you run a marketing campaign and be more profitable in your business, and a good likelihood to defend against and to eliminate fraud and forgery and people taking advantage of your goodwill as far as money goes. So let's jump into this. What is the bookkeeper all about? Well, there's several different accounting type functions in a business, bookkeeping being one of them. But the business person, you and I, need to know on a daily, weekly, and monthly basis how we're doing. It's so easy to get tied up in the busy work of selling and employees and meeting customers that we tend not to pay attention on the numbers until the end of the year. And that is not a good thing. It's another one of those priorities we need to keep at the top of our list. Everyone knows about the accountant, but let's talk about the accountant's role before we get into the bookkeeping role. The accountant, the CPA, the accounting firm that you may or may not work with, their job is to look over the big picture. The accountant's job is to look over the bookkeeper's work. The bookkeeper does a certain task and sends them on to the accountant. The accountant looks at monthly totals, the annual financial statements, federal tax returns and reports, things involved for the owners of the business and the stockholders. In other words, the accountant considers those as the big picture for long-term plans. That's not what we're going to talk about tonight. Because the bookkeeper is all about what's happening today, what happened yesterday, and analyzing it and being able to explain it in numbers. And the way they do that is to analyze individual invoices that are done each day. So they do the daily financial transactions. They look at all the debits and credits. They look at all the checks that are being written and the money that's coming in. That's debit and credits. Sometimes your bookkeepers actually produce all the invoices that go out to your customers, and they maintain on a daily basis now your general ledgers, your general bookkeeping paperwork, and maybe that's done on the screen with a QuickBooks software, or maybe it's done on a journal, and some bookkeepers do both, okay? Sometimes the bookkeeper also looks after the payroll work in a company. But I want to simplify it as best as I can. When we think about what the bookkeeper is doing and how they can help us, we need to understand that they work in a cycle of about 8 different parts. So on your screen, you can see my cursor up here by transactions. I suggest that we just write a 0 in there, because your bookkeeper starts out with 0 every day, a clean sheet of paper, and goes all the way around through all the invoices that have been written by the company that day, back around to the top of the list, and there's going to be a 0 right there. So the first part of the journey is to analyze those invoices and determine if we're looking at income, how much money has come in, to break it down all the way around the list, all the way back up to here to how much money came in, the total amount that was bought in that day with all the invoices, and then what happened to that money. That would probably mean a bank deposit slip with X amount of dollars on it, and when you subtract that from the money that came in, that would leave another 0 at the top of the page, and the bookkeeper's work is done. That's a super simplistic way of looking at it, but it is a truthful, honest way of looking at it. So let's think about it again. What is the tools that the bookkeeper uses? Well, of course, they use their computer and their bookkeeping software, or pen and pencils and paper journals. They certainly use those. But what is the knowledge? What is the knowledge tool here? Well, of course, it's whatever education or experience they have. But the bookkeeper's main tool they use is called a chart of accounts, whether in electronic software or on paper journals. And the chart of accounts is a summary of the different ways that money comes into the business, and a summary of different ways that money goes out of the business, and then other general accounting issues. Remember when we did our, in week 2, we did our budgeting and our business plan webinars, and they all were talking about different business models, income models, and expense models. Well, each one of those different type of models, the bookkeeper would look at those and assign a chart of account numbers to them, and therefore we've come a full circle now from week 2 to week 6 and 7, and that is we don't break down where the money's coming from and where it's going, so we can determine where our profit or our losses are coming from. That's why we need to do it, because the way things are mixed up on the face of an invoice, it's hard to do it. So usually the asset side or the income side, the black ink side of your bookkeeper, we don't call these a chart of accounts number 100 accounts, 101, 100, 150, 160, 199. Those accounts will have those type of numbers if it's income. And then if it's liabilities, most new bookkeepers will start out using 200 numbers, 200 through 299, and naming each one of those expense accounts a different number. Then all other types of accounts that might come up in every business is going to be a little different and have a few different accounts. We'll put other numbers on those, and usually bookkeepers call those the 300 numbers for different things that may come up that is not an expense model or an income model. But they'll all be listed out, and every company will be a little different. So we don't look at doing this, and whether or not you're doing it on a computer screen with software or writing it down on journals the old-fashioned way, that chart of accounts is going to come into play. But every time you break something out, you're going to write it down. Now here's a simplified chart of accounts from, it looks like a building supply company, and they've got listed down for, this is a weekly total. They didn't write me any invoices, so it's easy for me to use here. Every piece of work that you do that you're charging a customer for, be it a product or be it a service, you're going to assign an invoice to it. That's how you send the bill to the customer in the form of an invoice. And every invoice needs to have a number on it. And I suggest that those numbers be kept in numerical order. And every invoice needs to have a date on it. And I suggest you keep all those invoices in chronological order, so that when you need to go back and find an invoice, you're able to find it quickly and easily without any doubt. And yes, computers supposedly took away all the paperwork. Not. You still don't need to have your paper copies of the invoices available to you in case the computer crashes or otherwise. But it's just a good way to do it, especially as you're first getting started. So number your invoices, starting wherever you want to, or you can number them in chronological order with the dates that you're writing them. But if you notice on this simplified chart, these folks have got it broken down to hardware items, plumbing items, sales tax items. They've got them dated and got the invoice numbers there. You can start out with a sheet just as simple as you just first start in your business. Now, in my businesses through the years, when I first joined the business back in 1959, we were probably writing maybe 10 to 15 invoices a day at our small tractor dealership, parts, sales, service, and equipment sales. As we grew through the years and diversified in lots of different product lines, when I sold the business, the bricks and mortar parts of my business in 2008, we were probably averaging per year, we probably average 80 invoices a day, probably, sometimes more, sometimes less. But 80 invoices a day is a pretty good lick of work for a bookkeeper, because every invoice in my businesses that I run and manage, I want my books clear every day. I want them clear every day, so if there's any surprises, I'll know about it the next day. We're going to take a sample invoice here. Sarita's with us. Hey, Sarita, glad to have you with us tonight. And Sarita's our senior member of the Academy of Associates. And after we finish this series, she'll be a Master 12. That means she's completed approximately 15 different classes through the years and stays with it. And we certainly do appreciate it. She's also the one that helps us print and design and get our certificates out. So, Sarita, we don't pretend that you own this gift shop tonight and you've got something started here and you're sharing the invoice with us so we can break it down and see what's happening. So notice that the invoice has a number on it, 1216. That may be a numerical number on the invoice, or it might mean that the invoice was written on December 12, 2016. The next one would be 1216-2 probably. So you can number and keep up with your invoices ever how you want, but just keep them in an order that helps you find them when you need them. This invoice total is for $8.56. We sold a box of candles. Sarita's going to be big in the candle business this fall and ordering a bunch of them. So she sold this box of candles for $8.56. There was 7% tax on it for 56 cents. So we look at our sales revenues, and the first thing we take out is the tax. You don't own that tax money; it's not yours. You collected it on behalf of the state. So usually bookkeepers will deal with that fast and take out sales tax and set it aside, kind of put it in a pigeonhole so it'll be ready to send to the state when it's needed. So the numbers we're working with internally are $8, and we know that that box of candles actually cost us $2. That was our invoice cost for it from the manufacturer. And we had 55-cent freight. So we're going to break out those two and give them different chart of account numbers so we can keep up with our cost of sales and our freight and such as that. Sarita also gives her clerks a 10% commission on sales. So she's going to set aside 80 cents to go to her sales commission. Notice she didn't pay the 10% on 856. You don't pay commissions on taxes, okay? You don't pay commissions on freight. You pay commissions on what's left. So however, we did include the freight in this one, but in big items you would not. We have a customer loyalty plan where that we set aside 5% of our sales to be able to say thank you in discounts or other ways to our loyal customers. So there goes another 40 cents. And Sarita followed our recommendation and put a 6.5% marketing fee on what she's got to sell that she's doing specialized marketing on. So that means she's going to recoup 52 cents out of this sale and earmark that so she can tell if her marketing campaign is working or not. Yeah, that's how you make your ads accountable. If you remember in week 4, we talked about the hook and the crook and the 27 times plan. We keep up with how much the advertising is actually brought back into us. So when we take these things into consideration, we can see that our cost of sales was $4.27 out of that 856 sale, which means that it cost us 53% of our margin to make that sale. Well, that leaves 47%, which is pretty darn good. Out of that box of candles, we're going to end up with a $3.73 margin. Notice I didn't say profit, but that box of candles bought us $3.73. So what? This is why we're doing this. As a business owner, you need to know what kind of profit you're making on the individual profit centers you have, be it either products or services, because it's so easy to get caught up in the big scheme and the big picture. We don't look at the individual items, but it's the individual profit centers that make us our pennies, dimes, nickels, quarters, and dollars. So making $3.73 on a box of candles tells us that we need to sell 100 boxes to make $300 margin. it needs to tell us we need to sell 1,000 boxes to make $3,000 margin. And 1,000 boxes of candles takes up a lot of space. As maybe not a shelf life, but maybe a short season to sell that many candles. So by looking at these numbers, you're starting to see what it's all about to forecast. If your no forecast is you can't sell but 500 boxes in the given holiday season, then that'll tell you how many boxes you're probably going to order, and that will automatically tell you that when you sell them all, you will have made $1,500 margin on those candles. So you can take these little bitty numbers that the bookkeeper can give you, and with just general logic and forecasting, forecast and guess. I know we're guessing what your income, what your margins will be for a whole season when you take your profit centers and look at them in this light. So that's the crux of it. Also, that if you're going to bring in 100 boxes of candles versus 1,000 boxes, how much space is that going to take in your office or in your place you're storing them? Are you having to pay rental on that space? Are you having to pay insurance on that amount of income? Are you having to pay interest on the money you borrowed to buy that inventory to come in? Your bookkeeper's information can help give you worlds and worlds of information. So again, we'll go back to the chart. Each one of those items on every invoice that day would be entered into the journals. It would be posted in there. We would have to add up all the little numbers to make sure the little numbers add up to the big ones, and everything balances out. And then we're going to find out when we get into that there's usually a mistake or two. Clerks and people making entries make mistakes. And when the numbers don't quite add up, maybe a few pennies or a few dollars off, the bookkeeper has the responsibility to make the adjustments to put it all right. Because we have to pay taxes on what we're supposed to. If we didn't collect enough tax money, Steve's going to have to make an adjustment to pay enough, such as that. If someone made a big mistake in their math or an error like that, the bookkeeper's responsibility is to find it and to record it. When that recording is really important, and we call that the adjusting journal entry. And those recordings are important to the bookkeeper for two main reasons. Number one, so she can explain to the boss what happened. Number two, explain to the boss who made an error. And maybe most importantly, number three, it might be her get out of jail free card. Because when someone comes back for an audit a year or two, a month or two, 5 years later, and sees that the books didn't look just right, the numbers didn't add up, the bookkeeper can go to her adjusting journal entries and explain why she made those changes. May keep her out of a lot of trouble. So they're really important, and most bookkeepers will keep a copy of their adjusting journal entries for that very reason, to help them down the road if they need it. Then as we do those, we'll come up with the balance day's work, where all the invoices add up and we got the balances equal out. And when you do that, you're able to close the books. Now, let's say this sheet of paper is where we're working the income coming in. So let's say we took in $2,000 on that particular day with all these invoices, a $2,000 increase. Just above that, Steve would list down the deposit slip number and show that $2,000 was deposited into the company checking account that day. Subtract that out and you got a zero at the top. The bookkeeper's job is done. The boss comes in the next morning, he can see how much money came in and where it went out and feel comfortable and safe that no money is missing and everything's in order. We do the same thing with money going out with the checkbook. They'd all be listed in the chart of accounts all the way around to we started out with a certain balance this particular day. At the end of the day, checks were written out to this balance, zero at the top. So that's bookkeeping and a fast issue. What I want to drive into your head is bookkeeping is not just about getting a monthly report and being told how much taxes you need to pay. You don't need to go there. Bookkeeping is where you get that monthly report and you pay your taxes because you pigeonholed that money. But more importantly, you went on and you looked into it to determine where you were making money and where you were losing money and make the adjustments. It's time now we talk about separation of duties to give you some fraud protection and embezzlement protection. And that is, it's a good idea to set your checkbook or your check writing expenditure system up so that one person can't have all the power. Require 2 signatures, 3 signatures, require some type of purchase orders. You can do a lot of different things to protect yourself, but you do not want to start a new business out with someone having the authority and power just to write checks without you having a say-so in it. I suggest that as you're getting started is that one, you sign the checks. You can have someone else write them, prepare them, get them all together, bring you a stack of invoices with a check on top. You look it over, satisfy yourself, and you sign that check. That's ultimate control. But if you don't have the time or you don't want to be bogged down with that, and at some point in time, hopefully your business gets to that point that it grows that much, you can still have safeguards in saying that 2 other people have to sign the check, or that one person signs that you have to go back, or you might say that checks over a certain amount require 2 signatures. At any rate, think about what's it going to take for you to have your business set up to help keep people honest. Because that's a safeguard you'll need to think about. One of the things you do is to have a stamp, a deposit-only stamp on every check that comes in as soon as it comes in. Either if it's mailed to you or if one of your clerks take it in, as soon as that check comes into the company hands, stamp it deposit only. And that keeps, if there's a robber or somebody gets lost, the checks get lost in the shuffle or in the mail, whatever, that check cannot be cashed by someone else. You'll always be able to recover your funds. Deposit only is an important thing to do. I suggest that you open your incoming mail. Don't trust someone else to open your mail in your business. You find time to open it at least once a day. By opening your own mail and credit card statements, you will see if your bills are being paid on time, because if you're getting past due notices on bills that you thought should have already been paid, that's a great big red flag going up. If you open up your bank statements, whether you analyze or reconcile them or not, just looking at them, you can recognize checks that look unusual or signatures that don't look right or things that you question because you don't understand, and then go question them. If you're in the habit of raffling through that bank statement and then giving it to your bookkeeper or person that analyzes those, they will know that you're looking at it. And then they will be more honest in knowing I don't need to do any shenanigans here because the boss will see what's going on. It's just a good insurance thing you can do. With late model in bookkeeping software, you can have your software print you out different charts, different graphs to show where your sales are, what your expenses are doing, how much of your money is going one place or another. Have a lot of fun with this, and it's not a big deal at all for the bookkeeper and for whoever's helping set up your software. So look into what's available to you and set up those items that you need to do, and you can get some good graphs. What that will do is to save you lots of time. In other words, when you get that monthly report, instead of having to analyze all the little lines and all the numbers, you might have graphs that have already done it for you to show you what's up and down and what piece of the pie is doing this for you. If your bookkeeper is doing the payroll, I need to give you some advice. One is the payroll clerk needs to be responsible to you, the business owner. And if you have employees that like to bitch and moan and complain about their paycheck every week, they can just wear out a bookkeeper. And some people are going to find something to complain about every day. The way to nip that in the butt is you tell them, don't complain to my bookkeeper, bring it to me. And if you and I can't figure it out, we'll go talk to her together. In other words, you want your employee, your staff, to know that the bookkeeper is loyal to you first, and she's not authorized to get into the details with them. That's a good safeguard that will, number one, protect your bookkeeper from a lot of abuse and stuff she don't know, and number two, make you have better communications with your employees and help move the things along a whole lot better. So, lastly on bookkeeper. Some people hire a bookkeeper in-house, and some hire an administrative assistant. And more people are doing the virtual assistant, administrative assistant for their bookkeeping, especially as you're getting started. I endorse that because generally you'll probably be able to get that work done for $100 to $200 a month maximum as you're getting your business started with doing your bookkeeping function. And they will give you a monthly report and also handle your sales tax payments. And there's no way you can hire someone for any length of time per day and get by with that expense. So that's a good option for you. And if you're just getting started and you're in our general area here, I know lots of people that would appreciate a chance to give you a quote on your work if you're just getting started. If you don't hire your own person to do your bookkeeping, here's the safeguard. Know that the bookkeeper is doing tedious work and they need some private time to work on bookkeeping. So if your plan is to hire this bookkeeper, they can also be your receptionist. They can also answer your phone calls, maybe do some work at the parts counter, maybe do a lot of other little things that have to be done in a business. You're getting ready to make a mistake. The bookkeeper needs that private time to do the bookkeeping. So because the interruptions, the disturbances will help them make lots of mistakes. And the more mistakes is made as they're trying to balance all those invoices means that it's going to take them a lot more time. You're going to spend a lot more money to get a lesser quality product. Sometimes those mistakes end up having to go to the accountant to get figured out. And anytime you send work to the accountant, you're going to run the bill up even more. So the best way to avoid that is to let the bookkeeper have private time to do that daily work. Once they complete that daily work, then they can assume some other duties. But give them the private time and a space to work where they can really do a good job for you on your books. In the long term, that's going to pay you a dividend because you're going to get better information when you need it. Okay? Phase one. Anybody have a question on bookkeeping in general, just click right in and we'll be glad to try to answer it for you. Otherwise, you're welcome to send me an email with your questions or write it over in chat and I'll try to answer them for you. Let me ask you again that if you haven't signed in chat with your name, email address, and town, I'd appreciate you doing that. Who likes to play chess? Who likes to play checkers? I enjoy both games and have for a long time. Not really good at them, maybe better at checkers than chess, but I enjoy the thought process. Playing those two games and maybe some others as well, what you're doing is realizing that the move you make today or now will affect how you do later down the road in other moves or future moves and getting to where you want to get. It's sometimes we can't take a straight path to the exact place we want to be, and the different types of moves we make help us get there. Business is like that as well. And the two business skills that are like a chess game are forecasting and negotiating. And we're going to talk about those now, forecasting and negotiating. Forecasting, we use it every day, just like I started out the program tonight talking about the weather. We all do that weather forecast and know how important it is. If you plan on taking a cruise over through the holidays coming up or next spring, we're going to be real interested in going somewhere where the forecast will be good and we'll have a good trip and a good investment. Whatever other business we're in, including raising animals, we all need to be aware of the forecast because if our animals outside, We want the babies to be born in warm weather so they'll have green grass and plenty to eat. And it's going to be important to us to know what the weather will likely be when things are happening with our herd. If we own a lot of forest land or we're out west or even in North Carolina, we know that these wildfires, forest fires, are usually caused by lightning strikes. So these folks are looking at the weather forecast every day and every night because they know if the humidity is way down and it's dry times and we get a lot of lightning strikes, there's probably a fire burning somewhere, and they will actually send out spotters to see if they can find the fires before they turn into big ones and get them put out. So forecasting affects us all. If, however, you see this sign at a business going out of business, probably the lack of good forecasting is the reason that sign is up. Usually when we see the going out of business sign, it means something didn't work out well. Either they lost money, had to go into bankruptcy, or couldn't figure out a way to do a transition and to sell it and stay in business. It's not a pretty sign to see, a going out of business sale. I like seeing that sign that says open under new management or new grand opening. But poor forecasting will close a business down, so let's talk about it. What are the things that you need to be aware of that has to be forecast? And if you're not doing it or don't know how to do it, it's time to learn. First of all, I want to talk about stock. If you're selling products, how do you handle your inventory amount? Inventory, profit, stock, all comes down to a beautiful word, turns. T-U-R-N-S, turns, which is brief for turnovers. The thing to remember right now is it's not the amount of stock that you keep in stock that counts. A large amount of stock doesn't mean you're making any money at all, because we don't make profit on our inventory until it turns. And having the right amount of inventory at the right time in the right season so it will turn when the market is going on is the key difference in making money and not making money. And ordering that turnover in time is critical knowing your business. So that's why staying in the game long enough to learn these secrets are important. As a tractor dealer, we had to order our equipment a year in advance, a whole year. So in January, we were ordering equipment that will be coming in the following December. And that took a lot of guesswork, and we were dealing with big ticket items. And if you guessed real wrong, you were in big trouble. But I wanted to grow volume. I wanted to be a bigger dealer, make more money and such as that. So we would order in huge orders and betting on our ability to have a good marketing campaign of moving on out. Then the internet came along, and that gave us the opportunity to say, well, if I can't sell it to my local folks, I can sell it nationwide. And that really gave us a shot in the arm. Our annual orders went from maybe ordering 20 or 30 tractors total for the year to ordering 200 or 300 tractors over the course of the year, because we had the opportunity and marketing campaigns to see it work. All that based on experience, forecasting, and negotiating good deals. Same thing applied for our forklift sales. When we first started out with forklifts in '71, we'd order in 10. 30 years later, in 2000, we were ordering 100. So knowing that marketing campaign and being able to understand turnovers is the key to the game, makes a lot of difference. You need to be in your business long enough to know how that works. Staffing has to be forecast. You're adding products, you got a season coming up, you're going to have a big sale, you want to have extra staff there to help you. The staff just can't come in off the street and automatically start making you money. An unskilled, untrained staff person will cost you more money than you can imagine, plus you're having to pay them to help you lose money. So as you're looking into the future, as you're forecasting where you're going to know that planning to train your staff is so important. That's one reason that maybe you want to encourage your employees to attend these webinars and seminars that I do and other presenters, because you can get free training for your staff right here online through the community college small business centers. And that can be a big help for you. A lot of free information here, but training, better training equals more profit for you. Trying to cheap out with low-cost labor with no skill levels end up costing you a lot of money. Employee turnover, because of those factors, is the most expensive part of a business that has to have employees. Turnover is awful. Paying better wages, looking after your employees, make sure they're fully trained, have confidence and love their job. They're going to make more money, and because of that, they're going to make more money for you. As things change, as we were talking about Serena ordering in her candles for her gift shop, that group of candles maybe was going to cost her $1,000. And that $1,000 will have to sit there for several weeks or maybe a couple of months before it turns into cash for her. So where's that money going to come from to buy that inventory? Negotiating. Number one, she might have been able to negotiate terms payment on that inventory with the manufacturer. In other words, pay a little bit up front and then have a targeted payment dates to pay for them as they were sold without interest if she could negotiate that. So looking at your cash flow and your terms come together, and then it ties into negotiating with your suppliers to get the best terms possible to help you save that money and at the same time have the inventory you need at certain times. Think about what might need to be working in your company related to ordering in advance or capital that it takes to have the inventory. If you have any questions about it, drop me an email, ask me a question. Maybe I can help you with it, and I'll be glad to do so. Okay, remember that old Zuckerberg said it's the risk. You got to take the risk, and I'm telling you, he's absolutely right. So where are the main risks that you might be able to look at? What I want to encourage you to do if you're just getting started in your business is actually write down what you think your risks are. Where's that old curveball going to come in out of left field and hit you right in the head? Where's that unexpected expense going to hit you? Think about it. Write a list, make a list of them. What are the things you need to be concerned about? Because if you know what you need to be concerned about, there's a risk management practice or tool you can put in place to help you avoid the big deal. And I'll tell you right now, if you're talking with an independent insurance agent about helping you with your business insurance, they have a risk management software, every insurance company does, that if you tell them to plug in what you're going to be doing in business and tell you what your risks are involved, it'll spit it right out to you. I haven't done this, but I will tomorrow. You can probably do it on AI now. Just say, AI, tell me the main risk involved in this type of retail business, and it'll probably give you the answer immediately. I'll try that and see if we can check on that. But the categories of risk are numerous, all different types. The good news is we all know that insurance is a risk management issue, but that costs money. There's a premium that comes with every insurance. But I want you to know that with most risks, there's common sense things you can do to avoid them, such as housekeeping and training and talking, proper lighting, cleanup, just general common sense issues normally will come at the top of the list. And the better you do addressing risk management issues, the lower your insurance premium is going to be. So it will save you money taking this seriously. Who's the best? The very best risk management person to talk to is someone that's been in your type of business for a while. Someone that's been around a while and can tell you from personal experience in your area what are the things you need to look out for. Yeah, very important. Some people might tell you in the retail business, but with this product and in this neighborhood, you have got to do certain things to protect yourself from shoplifting. In this area of town with these customers, you really need to have better parking out front or better lighting. Lots and lots of good advice can come from folks that have been there and done that. Don't be ashamed to ask. Excuse me. Hey, don't be ashamed to ask. Know that folks are very willing to help you if you're willing to ask. Find that, been there, done that, fella. So, what are the primary goals of forecasting? To have the right product with the right quality, style, and quantity. To have it in stock at the time you can get the highest price for it. And when the market is over, to be able to sell it at the lowest possible price and still make money and not lose it. This is risk management. Forecasting and risk management go hand in glove. So think about it, talk about it, and plan for it. Now we're going to move into negotiating, but I can't leave forecasting without saying, and I want y'all to go to your chat board now and answer a question. Do you think you can forecast how a negotiation will go and probably end up? Yes or no? Do you think you can forecast in advance how a negotiation will go and be in your best advantage? I can tell you that most people will say no. They say negotiations will go where they're going to go, and I don't have a crystal ball. I see some of y'all agree with that too. But I got to tell you, the reason you're here tonight is to get information that's going to help you in the future, and this is a big deal. First of all, you've got to put in a little sales here. When you're negotiating, when you're entered into talking with a customer, your mindset in transmitting to them that you feel like you got the deal in hand. There's no reason in the world this customer will not want to do business with you. So attitude and confidence projection have a lot to do with negotiating. But more than that, forecasting is the key. Forecasting is the key because you can absolutely get a good feel for how negotiation will go and prepare for it to go your way if you're willing to do total preparation. If you're willing to do the homework. Like every other skill, it's about, do you really know how to do it? Do you know the little things? Whether you're making a quilt or a banana pudding or building a house, it's the little skills you learn that help you have a successful, happy ending, right? It's exactly the same with negotiation. And the longer you're in the game and the more you do this, the easier it's going to become, but it's always going to be there because we're always adding new products, new profit centers, dealing with new type of customers. Total preparation help you realize in advance what your target goals are, what your pricing will be, the terms you can work with, and what concessions you will make. Thinking about it in advance. The Major League football teams, the professionals that are going to play Sunday afternoon, they've been doing it for years since they were kids in school and through college and now many years on the professional field. They block and tackle and run plays every weekend and have been doing it for 20, 30 years. But you know what? They still have practices. They still have skull sessions. They still watch the films because what they need to do is total preparation. And no matter how good you are at the fundamentals, preparing for the special circumstances with each negotiation or with each football game is the difference in winning and losing. That preparation includes learning how to introduce yourself, learning how to make sure the relationships that you've made in the past have weight to them and help you with introductions and reintroductions as you're moving into new negotiations. Knowing that how you're sitting at a table or position yourself, how you rise to meet someone, positioning is the way it's seen by other people and what you're projecting is giving that confidence level to folks that I want to do business with them. Your documents that you bring to a negotiation. Are they just notes scribbled out on a pad like this? Or is it something that's typewritten with the options already spelled out and the bottom line ready for a signature or a final amount of adjustment? Your documents need to be works of art that you're proud of, and the customer will recognize that you've done it professionally. Please listen and hang on to this. It's a big deal when you're getting ready to make close a deal or making a presentation. And as we talked to Sam about earlier, Sam prepared a list of frequently asked questions that you get into a specialized industry that covers pretty much all the bases, done very professionally. And when I read that, I learned more about what he's dealing with than I've ever known before and was amazed. And so sharing with and having that information available for yourself first, but then to the person you're negotiating with, sends a signal that you came here to do business. I used to say I came here with my trading pants on today. I'm ready to do business. Doing those frequently asked questions, ready to share answers, good answers, give you a likeness to total professionalism, one that the customer gains confidence in doing business with you. Know up front what your bargaining range is. Know that you're after the top dollar. You want to come away with as much money as you can without taking advantage of the customer. But you got some leeway, and you need to know what that bottom line is. And that range is going to give you a roadmap to where you can start at and how low you can go. And that roadmap is going to tell you can't go but in certain increments, or you'll end up below your bottom line target. Huge, huge difference in marketing. I do a special webinar where we actually take some different things we're buying and selling and then see how that negotiation works out. It's a good thing to know. Know that in negotiating, you have secret weapons. And if you don't have secret weapons, I want you to get some. The secret weapons in negotiation are those tidbits, those items that you know give you some leverage to close a deal. I like to call that the value-added features. That's what makes you unique. What are you offering someone else don't offer? Is maybe your office is close to their office, and you will welcome visits back and forth. Maybe your proposal includes a certain amount of counseling work. Maybe your proposal includes a certain amount of training at a low price. It don't have to be free, but at a very low price. Remember that one of the quotes we had was always give the customer a little more than they expected. You think about what the little things you might offer a little more inspection. And then when we're moving into that closing moment, that time that it's time to close this sale, you might be able to take one of these value-added features and lay it on the table to help you close the deal. You have to think about this in advance. Now, the good thing about it is you don't have to do it but one time for each different type of negotiation. And then you save this worksheet, and you'll use it over and over all through the years. And eventually, my friend, at 66 years in business, eventually it all becomes second nature to you. And this preparation is in your brain, and it just comes out as the persuader that people want to do business with, because they know that you know what you're talking about. You're not lying, and they trust you, and you're able to convey that confidence to them, and it's contagious. If you feel like you got the deal, they don't say, well, he must think he's got what I need, so why don't I just go ahead and do it? The value-added features are your secret weapons to closing the deals. Sometimes you don't need to lay this out front now. You need to hold this back. It's what I like to call dry powder for the end of the deal. Another thing in negotiating is know that the professional salesperson, negotiator, knows there's a time to stop selling. There's a time to stop chit-chatting, and there's a time to close the deal. In every deal, there's a certain period of time, usually very small, that you've noticed the buying signals, the body language, the nonverbal communication and sometimes the verbal communication where the customer is sending that signal to you. Okay, I trust you. I like what you're selling. If you can close this deal, I'll probably do the deal with you. That's a buying signal. That's when you want to pull out your best weapon of all, and that's knowing how to capture the moment. Knowing how to bring this general conversation chit-chat into a capture the moment for you. To let their attention get off the wall, get off the sidelines, get out of the stands, and bring it right down to what you're saying right now because you're ready to do this deal. And you do that by planning for it, using verbal gestures, shaking your head, yes, like this, doing your handshakes like this, being a little dramatic, lower your voice down real low. Take a silent pause for a second. When you're being silent, the person on the other side is tuning in to what you're going to say next. And you're looking them right in the eye. And that's when you really move for the closing statements to get this deal done and you got their attention. Next week, I'll take this to the next level for you. Strictly business now. You need to buy something. And you know you're going to buy it. And you know you'd like to shop for it to see if you can save some money. Well, that's what you're supposed to do, is to go shop, get different bids and quotes, and then use your brain to get the best deal you can get. The best way to do that is to do what the textbook says, find a BATNA, a best alternative to a negotiated agreement. And simple, you want a plan B. You want to know where you can go buy what you want to do at a certain price that you think is fair and reasonable and affordable for you, financial for you. And after you find out where that deal is, then it's time to start negotiating. Then it's time to go out in the world and get the same deal that you know you can get for $5,000. Go find out where you can get it for $3,500. Because let me tell you, on big ticket items, professional salespeople, just like I've taught y'all to be in the last lessons, have got big markups. They mark the stuff up high enough to give them negotiating room. And indeed, if you don't use your negotiating skills, you're not going to get the best deals out there. If something is priced at $5,000 by a professional retailer, they can probably take $3,900 for it if they really decide they want to sell it. Or if that's the best offer they get at the end of the month. If they got it marked for $10,000, there's an excellent chance they can sell it to you for $8,200 on big ticket items. You got to know that, and then you have to go out and earn your keep. Be willing to negotiate. And you make those low offers and negotiate, see where you can get them to. You know you can buy it for $5,000. So every offer you get out and start making, it's going to be for $3,500, and see where that negotiation goes. You may find tremendous better deals, or you may not. Now, let's say that you do find a like product for a lot less money. I want to say to you that I still want you to go back to that person that gave you the first deal that you thought was reasonable and you were using that as plan B. I want you to go back to them and say to them, I really appreciate your fair and honest offer, but I had to do some shopping, and I want to come back and give you a second chance to see if you might be able to improve that a little bit and help me do business with you. I want to do business with you. Give them a chance to give you a second offer. And if you can do business with them and feel good about it, go ahead and do it. Your ability to go back and get a second offer is not going to turn that person off. You might want to say to them, I didn't use your quote. I didn't tell anybody else what you quoted me, but I've got some other people in their first offer that I need to seriously consider. That conversation builds confidence and trust. And indeed, that person will give you a good offer the next time, whether you do business this time or not. You gave them a fair shake. And That's what people ought to do, in my opinion. To end up with a good negotiation, sometimes you have to talk a little bit. If your presentation is take it or leave it, it don't take but a second for someone to leave it. But if your presentation is let's talk about this, let's find common ground, then you got a lot better chance of ending up with a win-win deal. I wrote a little book called Yes, If, No, But Negotiating. It's available at Amazon. It costs a couple of dollars. However, most of the things that's in that book we're going to talk about right now. Yes, if, no, but is saying keep the conversation going. When someone makes you an offer, you might say, thank you so much for that offer. I appreciate it. I need it. And yes, I can take you up on your offer if we can make this adjustment. Or no, I'm sorry, I can't take you up on that offer, but if we make this adjustment, I can. Yes, if, no, but to every offer that comes to you that you can't take. What you're doing is keeping the conversation going. You're never saying, no, hit the road, take it or leave it. Keep talking, because lots of times the customer and you will realize it's not the cheap price they're after. They want some quality. They want some features. Maybe they want a better deposit. Maybe they want a less interest rate. And if you don't have time to discuss that with your customer, they won't ever know it. But if you do have the discussion, the back and forth, you're creating a relationship of trust. You may not get the deal, but the customer will still leave you knowing you didn't say take it or leave it. And when they need something else, will probably come back and talk to you again. Think about read on, yes, if, no, but. Put this in your tool belt. Let it be one of the things that you hang on to after this course is long over, because you will use it every time in a discussion. You'll use it all the time when you're doing bidding and negotiating. Basic rules. 4 fundamentals in negotiating. Don't give up anything unless you're getting something in return. That's the basic way you're thinking. It's a balanced scale. And anytime you can get something without giving up anything, that's a plus for your side. But on average, when someone's making you an offer and you're coming back at them with yes, if, no, but, making sure you're getting something in return. Try to get your customer to make you the first offer. Now, you set your advertised price up high enough, as we discussed back in week 3 in pricing. You set your advertised price up high enough that you've got room to negotiate and bargain and discount. Not setting your price up high enough puts you at the disadvantage to begin with. So now, if you've got your price up high and you get them to make you the first offer and you've got a plan on how high and low you can go in ranges, you automatically feel good about being able to make a counter offer if you can't take the one they came to you with. How do you know what that price range is? Because you did your preparations in advance. Some people may feel embarrassed or not sophisticated enough. Get over that, my friend. No matter how big a business person you are, or how much money you got, or how little you got, it's absolutely imperative that when you're getting ready to buy something, almost anything, and someone gives you the price, the first words out of your mouth should be, oh, come on now, it's your best price. Come on now, I know you got a good markup on this thing, and I'm a poor person. I need a good price. My farmer customers call this poor mouthing. I call it just good common sense. David, Amanda, Christy, Sam, Kevin, all of you, Sarita, if you're buying something and someone gives you the price, try it. It's your best price, really. Come on, man, get off of that and give me a good deal. I don't have much money. Tell me what it's going to take to the best deal you can give me. Sometimes, lots of times on big ticket items, the inexperienced salesperson across the counter is going to say to you, yeah, we got a little room here, but maybe I can come down $500. Well, my friend, you just made $500 by simply making a statement that didn't cost you a penny. By remembering what we're seeing right here, right now, and using this negotiating ploy, you can save thousands of dollars over periods of years. Is this your best price, really? Ask for it. Ask for the discount. If they've got it built in there, they'll be glad to talk to you. Now, excuse me, if you're on the other side of the fence and you're selling, and so Rita comes up to me and says, "Oh, come on, Steve, it's your best price. Please be sure you can do better than this." Well, you're going to recognize right off that she's doing exactly what she's supposed to do. And that's a sign of a good business lady. So your answer could probably be, well, maybe we got some negotiating room here, but I don't know, not much. Tell me, Sarita, what can you write me a check for today and feel good about? But make me a reasonable offer. They say, you've turned it around. She was coming at you with a negotiating ploy, and you've turned it around to get her to give you the offer you need. Once you have that offer, then you can start negotiating. So as the experienced person, you're not automatically going to come down on the price. You might hint that you have some negotiating room if you want to offer from them. That way you're not giving them up something for nothing, okay? Number two, what we just talked about, do not stop the sale in progress. Do not stop the negotiating in progress. Use yes, if, and no, but, and keep on talking to close the deal. Now, I got to say for you, congratulations. You're an independent entrepreneur, and you do not have to take every deal that comes your way. You do not have to take every offer that comes this way, and you do not have to do business with everybody that comes your way. Let me tell you, there's some people out here that get up in the mornings and travel out to see who they can screw in small business, who they can not pay, who get terms that are reasonable, make offers they can't commit to. If you have a sense, after talking with someone, and as you get professional and you better reading the body language and the nonverbal communications, if you have a sense that sometimes people are just out here are crooks and you need to be careful, you need to check out their references, that's perfectly okay. As my daddy used to tell me, Steve, don't go out here and set the woods on fire trying to get every deal you can. One bad deal can wipe away the margins you did on a lot of good deals. So you've got that power, you've got that independence. You don't want to abuse it, but you need to be careful. You need to be careful. Like debt credit references, check them out, and do things like that. If credit's involved or it's questionable. But again, the good customers, you to make profit, you keep talking till you find common ground. You close the deals. Now, in general, there are 21 negotiating tactics employees, 21 of them. They're in all the textbooks and colleges around the world, same ones we're going to talk about tonight. Some are insignificant in most situations, but they're all worth reading about. Because you and I don't know what opportunity is going to come at us tomorrow. So please save that study guide and read it when you get a chance. But I don't talk about the 9 most used negotiating ploys and tactics that I know of in this area. Number 1, I call it burst a bubble. That's something kind of new in the marketplace. And that's where like a real estate agent might call you and say, I have a client interested in buying your property, but it's priced way higher than they're able to afford. And they asked me to ask you, can they send you a low offer? Would it have any consideration? What they're doing is, what that agent is doing is setting you up to accept a lowball offer. And it's just letting you know it's coming so your first reaction won't be negative. Your response to that should be, absolutely, you tell them to go ahead and send me that offer. I'll consider any offer that comes our way. See, you know that you can always make a counter. You know that nothing's going to happen till you get an offer. And you also know that you have put enough margin and negotiating room in your advertised price to give you room plenty to negotiate. And indeed, their offer may be well within the range that you can take. Of course, you're going to try to negotiate and get it a little higher, but indeed, always be willing to listen to an offer. You're not going to give anybody any promises you're going to take it, but you want the offers. Our businesses do not start working until our customers make us an offer. Flinching. Flinching is when a customer makes an offer to you and you give a reaction to them as if it hurts you, as if that offer is so hurtful you can feel the pain. You can do it by putting your hands up in your chest like this, or putting your hands up here like it gave you a headache, but you're not going to say anything. Or you might say, oh my gosh, really? And then stop. After the flinch and the showing of pain, you be silent. The inexperienced negotiator may automatically come back and say, wow, did that hurt that bad? Maybe I can improve that offer a little bit and offer you a lower price without you having to give up a thing. Is it embarrassing to do it? Nah, it's fun to do it. Try it a couple of times and whatever degree of drama you want to put to it, but just say, oh my gracious, are you kidding? Oh, like that. Fine. And sometimes you don't flinch or you don't act like you're hurt. You just look at them like, are you crazy as Hades making me an offer that way? Don't say it. Just look at them with that look in your eye. And women can do this really well. They can look this way and then turn their eyes back and give somebody the side eye, I call it, and disgusted look on their face and not say a word. Sometimes that silence will automatically bring back a better offer. Now, these two ploys are used a lot. And if you're new in the game, maybe nobody's ever used it on you, but it's coming because these lessons are taught everywhere. On the other side of the fence, you recognize a ploy coming at you, somebody using this on you. It's perfectly okay for you to give them a minute, let it kind of sink in, and then you smile and say, wow, that's the best. That's the best negotiating ploy I've seen in a long time. That side eye is really effective. Now let's get on here and talk about me selling you this thing. Recognizing and telling the customer that they're using these ploys on you is an automatic levels the playing field and leads to a better chance you'll have a negotiating successful. Negotiators appreciate the professionalism of other negotiators, and once it's recognized, there's a common sense of professionalism there and appreciation, and both people usually work to get a good deal. Now, in this world of tariffs, in inflation, changing interest rates, and such as that, the ploy of telling that customer, look, we need to do business now because these prices are going to go up. The tariffs are going to run them up. New prices come out at the first of the year. You want to take advantage of the deals? Let's do them now. That's fair. That's a good deal. On the other side of that fence, you might say, well, I understand prices are going up, but I'm not quite, I can't pay for all this stuff today. Can I give you a deposit and you guarantee the price for me for a certain number of days? You might pay $100 deposit on a $10,000 item and get a guaranteed price till the first of the year, and that gives you time to negotiate somewhere else. You might have to give up your deposit, but keep that in mind. Pending price increase is a good one. Red herring ploy. Red herring is when the negotiator wants everybody to look at one thing so they can't take their eyes off something else. Not being political, but an example of that, many people are saying that the administration is so afraid of the Epstein files, they're trying to get folks to look at everything else. I've heard that a lot on the news. Or the car manufacturers want you to look at the items that are on sale so to get you into the showroom so they can show you the more expensive items. Red herring is a good negotiating ploy. Retreating to higher authority is when the husband comes in and makes the deal, but before he closes the deal, he says, well, I got to go home and talk to my wife before I can get authority to do this. That is that is a good negotiating ploy because they can go back, and when they come back, always they're going to make you a lower offer. So you need to guard against that on the other side of the table. And the best way to do it, if you're sitting down into a negotiating, just getting started, remember this is about the forecasting. One of the first things you're going to say is, look, I came to do business today. If we find common ground on a price, can you do business and give me the order? You got your cash with you or your checkbook. Customers are generally honest on this and will tell you, yes, I can, or no, whatever we talk about, I don't have to go back and get permission from my wife or from my husband, from my boss. Know that that is a professional negotiating ploy, reporting to higher authority. And they will always go and come back generally with a lower offer. So if you know that's in the plan up front and you're negotiating down your range, always leave yourself one more break that you might be able to discount because they're going to come back with a lower offer. Okay? Split the difference means you find common ground between where you are and where I am, and let's see if we can split the difference. And if the customer offers that to you, that means they are ready to buy. That is a buying signal. Now, you don't have to take them up on the split the difference, but there's several ways you can do that. You can split, but keep your numbers the same. In other words, you're going to bring their number down while you keep yours there. But it is a buying signal, so you want to read and learn how to do it. If you want more information on that, I'll be glad to share it with you. Showing me the cash is saying you're at the negotiating table, you're ready to make a final offer. You're going to make them an offer for cash or writing a check for a certain amount that is below where you're at now. And the words are, all right, I got the check here, I got my cash here, I can make it out to you and we do the deal now, or I can go down the street and do the deal with somebody else with my money. That really gets the salesman's attention, really. And they will almost always go back and have to report to their higher authority to see if they can do the deal. But generally, they will do the deal. On your side of the fence, you can come back and say, hey, I really want that money, but I also really need to make a little bit of money here. Can you up that just a little bit? So even if you're making a cash offer, that still gives you room to wiggle up a little bit to close the deal. So make the cash offer real low compared to where you are. Nibbling is when you keep asking for items after you've closed the deal. That would be like, now I bought this car from you, but I am going to get those free floor mats, right? Or I still get the lifetime oil change stuff this. You come up with everything you can to add to your package without running your price up. Customers are really good at that, and I encourage you to be really good at it. On the other side, when you close the deal, you write the price down, draw a circle around it. You initial it, ask the customer to initial it. This is where that having your documents be works of art, that's because you're ready to do this. And then, while you're getting the financing papers work or finishing the deal, they start nibbling on you. Then you go right straight to yes seal for no but. Yes, I can do that, but I need to add in my cost here because our deal has already got me at bare bones margin. But if you want this, we can add it in for this amount of money. A lot of business people will tell you that they really make more cash money when the nibbling starts than any other way if you're prepared. Building contractors will tell you that they make more profit money on change orders after the original deal gets started. So use this as a tool for profitability, but use it carefully because it certainly can be used against you. There are 12 other types of nibbling and negotiating ploys and tactics. I suggest you read them. Now, you're in business. You're in business for yourself. Your profitability has everything to do with how well you can put these tools to work. This isn't a game. Well, it's kind of like a game because it can be fun. And the better you get at it, the more fun it is because you indeed know that you're making money by doing it. These are critical skills for you to move forward in your business with. Another skill is recognize buying signals. Lots of different things people are doing. Show that they're ready to own it, interested in delivery, this and that. And when the buying signals come, it's time to stop talking and start closing the deal. Stop selling and start closing. Some salesmen just don't know how to stop talking, and they never get the deal. Get your signatures. Get anything witnessed that needs done. Congratulate the other side on being a great bargaining tool. And let me tell you, when you're leaving a successful negotiation, the main thing in your mind, the back of your mind is you want that customer to think that they got the best side of the deal, that you are proud of them for being such a great negotiator, and that hopefully they will give you a chance to do business in the future, so maybe you make a little money doing business with them and get out of there. It's important they feel good. You're giving them a little bit extra when you share with them that conversation about what a great deal they did and how much fun it was to work with them. Then shut up and get the heck out of there, because buyer's remorse is a very important thing. Sometimes you celebrate, talking, stand around chit-chatting about this or that. Lots of times, a third party, wife, boss, employees, child, some egghead that don't know nothing about the deal will start talking about this, running you down, running the price down, telling them about a better deal they got somewhere else. And people can be talked out of a deal. If you're still there, they'll tell you, I changed my mind, this and that. No, that's true. So close the deal, congratulate them on what a great deal it was, shake their hands, finalize it, and leave. And you celebrate after you get in the car on the way home. I'll share with you right now, too, something that's very interesting. If you're in a type of business that may be closing deals on Friday afternoons or Saturdays, and you're closing a deal with someone that's come into your situation, and you realize that maybe they're under the influence of booze or some other drug, but talking big, making big deals, I'm going to do this and I'm going to do that, even writing you a big check. Always know that the chance exists that when Monday comes, someone's going to call you on the phone and tell you something's really wrong with that deal, or really wrong with the products, or really wrong with you. And usually what that is a wife who found out about what her husband did. And they're going to get them out of it, or they spent money the wife didn't authorize. So if you sense someone's under the influence on Friday or Saturday, go ahead and do the deal with them. But don't deposit that check until Tuesday, because there's a good chance on Monday you don't have to deal with it. I have to give it back. Now, the old codger here is going to tell you, when they call you, be nice about it, no problems. I've still got your check here. You can certainly come by and pick it up. Encourage them to come by and pick it up instead of you just tearing it up. After you have made peace with them, that's no surprise them, number one, that you were nice about it. But after you have that initial conversation, then I would encourage you to say, now, listen, I've been doing this a while, and I really think maybe there was nothing wrong with our product or nothing wrong with our deal, but maybe y'all just had a change of heart and decided you didn't need to do the deal now. Is that right? And they will generally say, you're exactly right, and we appreciate your helping us through this tough situation. I guess no less than 80 or 90 times I've experienced this through the years. And out of those 80 or 90 times, I'll say that at least 45, at least half, maybe more, but at least half, in another day or two, that same party will be back and say, we talked about it, we worked it out, we can go ahead and do the deal if you can. Amazing. The human nature of that is amazing. If you take that negative situation, like old Zuckerberg said, and turn it into a positive situation, let them have the deal. You didn't make it a positive, you're not out anything. But you're going to create a relationship that works for a long, long time. You really will. Lastly, I want to say, bookkeeping, forecasting, and negotiating. I've been talking about negotiating as if it's something you've got to do to save money, something you've got to do to make money with your customer, something you have to do to stay in business for the long term and create relationships. But there's another side to this that I have to bring to you. And this is another nugget that I think you need to put in your safety deposit box. You need to be known in the business world as a great negotiator and have a legacy of that. And it'll start tomorrow. Every time you're dealing with someone buying and selling, you're giving that little bit of extra that's creating the impression that you're really good at this. Look forward to it and enjoy it. But the key here is that you're going to be consistent. I'm using these films about a farmer customer of ours many, many years ago who was a great negotiator. He bought all his distractors from us, and we enjoyed doing business with him. And we don't refer to him as Mr. Ball. He's a Sampson County farmer. He came across, his legacy was he was serious. He didn't waste your time. He was ready to make the deal. He had his cash reserves or a plan to pay you. He was 100% trustworthy. When he spoke, you need to listen to what he said because he didn't mix any words. He had a historical pattern, the way he acted, what he expected of you. And he would give you the first opportunity. Now, he'd go out and shop elsewhere, but he would give you the first opportunity. And if he found a better deal, he would come back and give you a second chance. He earned a reputation in our whole region as one of the most valued customers for everybody he did business with because you could trust him to be consistent. I want you guys to take up these attributes and try to make them a part of your legacy to keep you in business for the long haul. Let your light shine. Let it bring warmth and direction to you and to other people. Be the best person you can be. Charge your batteries every week. What does that mean? That means this business of being in business, that can take a lot out of you. Busy schedules and setting priorities and feeling disappointments more so than successes is really draining on our soul. Find a way, find a place that you can recharge your battery. I try to go to church every Sunday morning, and I find that just a slice of life in my life where I have some private time to ask for forgiveness and also listen to what the minister is saying and try to shape all that into how I can put it into my life the following week and feel like I can do a better job. And it's amazing how it works for me. So wherever you might find your peace or your inspiration, do that for yourself. Be still and know that we can't do all this alone. And most of us are working right by ourselves. I know that. So we all can pull together. We can pray for each other right here amongst our classmates, and we've done that a lot through the years. And indeed, we can know that we have other people that's dealing with the same thing, and somebody you can write a note to or have a chat with. You're not in this by yourself. I'm so proud and happy to have the opportunity to get to know you guys and share notes and opportunities and such as that. I want to remind you again that if you are anywhere close or in driving range to come to our roundtable in Clinton on the 23rd, have a piece of sub sandwich and some pizza and soft drinks and have a chance to meet everybody and have a little round table discussion. I'd be so happy if you can come. If you're a certificate winner, we'll have those ready for you. And if you can't come, we'll mail them to you. But at any rate, let me put a plug in for that. So thank you all. God bless you, your family, and your business. And if you have any comments, I'd certainly like for you to share them with us right now. Several of you are brand new tonight, and thank you for joining us. Okay, how about some comments?
Steve, tonight was awesome. I came in a little late, but I was listening, and I just that you are just so awesome. I love the way you wrap it up, and I like Mr. Ball, so I'm gonna check out all the things that he's, incorporating with himself. But just to let you know, because of you, I have a radio fan, and her mother lives golf course, and everyone is watching me and running up to me, and it's awesome. I'm having a great time. I feel like I'm Steve-O when I'm out there.
That is fantastic. Thank you, Sonia. Thank you so much. Anyone else? Who have we got at 336 Harrison Spring? The phone number 336-865. Who is that?
Hello?
Okay, Tasha, is that you? All right, thank you so much. Make a note of that. Okay, so Rita, how are you tonight?
I'm doing all right. How are you doing?
Good. Did you get the email I sent to you today?
I have to check my email.
I sent you the email to get started on the certificates if you'd like to do that again.
Okay, that's fine.
Okay, good. And Christy, glad to have you back on board, and the rest of you as well. So, have a great week. I hope it goes well for you. I'll be online again Thursday night talking about taxes, and we'll repeat that the following Tuesday. But so good to see all of you. Good night, family. I hope you sleep well and rest well. Good night and bye-bye.
Good night.
Good night, everybody.